Miss Aurorah is back. Okay, secured entrepreneurs. Miss Aurorah is going to answer some questions that we received via email. And thank you for emailing. Please continue to email at info@aurorahdayconsulting.com. In this video, Miss Aurorah is going to tell everyone, so please like, share, comment, subscribe, okay? Just how it is that the Internal Revenue Service is taxing an entrepreneur. Just how it is the Internal Revenue Service is taxing the sole proprietor. Just how it is the Internal Revenue Service is taxing the self-employed individual who is still filing a 1040. Just how it is the Internal Revenue Service is taxing the entrepreneur, the sole proprietor, the self-employed individual who is still paying themselves. Okay, now this is important because so many of you who come on board here at Aurorah Dey Consulting, and many of you who email, the question really is, how is it that I'm going from sole proprietor to CEO? Basically, that's the question, right? How is it that I'm actually creating a wealth cycle where I don't have to pay myself? We get a lot of emails every time somebody sees one of the videos where I'm talking about how there are many people, and I always talk about Elon Musk because everybody here in the secured entrepreneur movement knows that I'm a musketeer, right? So you're asking, I see that Elon Musk is saying, hey, listen, he doesn't pay himself. This is what he's doing. Okay. How exactly is that? How exactly is he doing that? All right. So in this video, as I'm saying, Ms. Aurorah is going to break out the IRS publication because I know that there are too many people who just do not read these publications. Now, Ms. Aurorah reads all Internal Revenue Service publications, okay? And a majority of the secure entrepreneurs know it, okay? So that's what we're getting into today. Is that all right? Can we do that? Okay, so for those of you who do not know who I am Ms. Aurorah Dey, and this is the Secured Entrepreneur Movement. All right, now, secured entrepreneurs, this is the Internal Revenue Service publication 334, publication 334. This is the latest version of the publication, which is 2022. Okay. This is the tax guide for small business for individuals who use Schedule C. So that means that you are claiming that you are self-employed. It also means that you may have an improperly structured limited liability company where you claim that you are employed by the company, you are self-employed, and so you are paying self-employment taxes on a Schedule C using your Social Security number. Okay, that's what this is about. So for those of you who are emailing and you're saying, yes, you are doing a tax return, you're doing a 1040, and you are paying tax, you weren't sure what the percentage was, all you know is you're being told that you owe some money, okay? And you're trying to find a way to remedy that. This is what you need to know, okay? Here we go. So first on page 9, the publication tells you straight away what self-employment tax actually is. Self-employment tax is a Social Security and Medicare tax primarily for individuals who work for themselves. It is similar to the Social Security and Medicare taxes withheld from the pay of most wage earners. Okay? Then it says, if you earned income as a statutory employee, you do not pay self-employment tax on that income. Social Security and Medicare tax should have already been withheld from those earnings, meaning you work a job, You work for somebody else. Okay. So then they tell you Social Security coverage. Social Security benefits are available to self-employed persons just as they are to wage earners. Your payments of self-employment tax contribute to your coverage under the Social Security system. Social Security coverage provides you with retirement benefits, disability benefits, survivor benefits, and hospital insurance, which is Medicare benefits. Now, how many of you and how many of the secured entrepreneurs already understand what is really happening with those particular types of benefits? You may understand that because of your own parents or your grandparents, some of us great-grandparents. So we already know how far those insurances actually go. Okay, that's number one. Number two, understand that there are many people who believe that Social Security is a plan. Now, the publication is telling you that, number one, you're entitled to Social Security. So you can't beat it. You're entitled to it. No matter what the amount is, you're entitled to it. But you know, we here in the secured entrepreneur movement, and any individual, all individuals who understand wealth building know that if you are collecting a Social Security check, that's just a bonus in life, because that is not the end all. That is not what we are looking forward to. We are not sitting up here saying, I can't wait to get 62 because I'm going to take my retirement early, because this does not a retirement make. Okay, so let's go on. Then it tells you, be sure to report all of your self-employment income. By not reporting all of it, you could cause your Social Security benefits to be lower when you retire. I want to note something, because as I just shared with the secured entrepreneurs and all of you watching, Ms. Aurorah reads every Internal Revenue Service publication, because no one who does anything for me as it relates to my books, my records, whatever, is going to know more than me. Sorry. Okay, right? Notice how they're telling you that reporting all of your self-employment income is to your benefit. They're not telling you, hey, if you don't report, we're coming to get you. You know, like this is the whole thing where people get freaked out. They don't understand that the Internal Revenue Service is a collection agency. That's what they do. They collect tax. Okay. But if you don't have any tax occurrences, okay, you don't have any taxable incidents, then you don't owe any tax, right? So that's what we're about over here. We're going to help you not to create any taxable events, right? Okay. So moving on. Under this section, you will see that the first thing they tell you is the self-employment tax rules apply no matter how old you are, and even if you are already receiving Social Security or Medicare benefits. So even if you're a senior, even if you're disabled, right, and you're claiming that you're self-employed, hey, it's to your benefit, they say, for you to report. So check it out. They go on to tell us that the self-employment tax rate on net earnings is 15.3%. And then they break down what the 15.3% actually is. 12.4% is Social Security tax, plus a 2.9% is Medicare tax. All right. They go on. Maximum earnings subject to self-employment tax. Well, only the first $147,000 of your combined wages, tips, and net earnings in 2022. Now, it's 2022 because this is the latest. Okay, I don't know when the next one is going to come out. So this is what it's saying. Okay, is subject to any combination of the 12.4% Social Security part of self-employment tax, Social Security tax, or the Tier 1 part of railroad retirement tax. Now, how many of the secured entrepreneurs understand the railroad retirement tax? Do you have any family members who are a part of that? That's interesting, right? All your combined wages, tips, and net earnings in 2022 are subject to any combination of the 2.9% Medicare part of self-employment tax, Medicare tax, or Medicare part of railroad retirement tax, right? If wages and tips you receive as an employee are subject to either Social Security tax or the Tier 1 part of railroad retirement tax, or both, and total at least $147,000, do not pay the 12.4% Social Security part of the self-employment tax on any of your net earnings. However, you must pay the 2.9% Medicare part of the self-employment tax on all your net earnings. Okay, now, this is the danger when self-employed people, sole proprietors, individuals who are saying that they are entrepreneurs and they are actually filing 1040s and they are making this kind of money, and they have not read any of this. They don't know that any of this is really exists. They are allowing individuals to do filings for them, and they really don't know what is happening. They don't know what's going on. Okay, so I would suggest strongly that you get a copy of the 334 publication online and begin to read this, because then it goes further. Now, deduct 1/2 of your self-employment tax as an adjustment to income on line 15 of Schedule 1 of that 1040 form. So they're telling you exactly what to do, right? So here it is, additional Medicare tax. A 0.9% additional Medicare tax may apply to you if your net earnings from self-employment exceed one of the following threshold amounts. And this is based off of your filing status. Okay, if you're married filing jointly, then it's $250,000. So if it exceeds $250,000. If you're married filing separately, if it exceeds $125,000. If you're single, head of household, or qualifying surviving spouse, if you exceed $200,000, okay, then an additional 0.9% Medicare tax would apply to your net earnings from self-employment tax. Okay, this is important for you to know, because there are a lot of people, and I work with these people, they're clients, doctors, people like that. They like to pay themselves well above the $400,000 range. They like to do that. And they're in the 37% tax bracket because of it. Okay. But if they read the publication, they would do something that is more intelligent. They would do something totally different. If they insist on paying themselves, they would pay themselves way less. Okay. Or they would understand how to create a wealth cycle and start allowing some entities to take care of them. Okay. Like we do here in the Secured Entrepreneur Movement, right? Okay. They also say, if you have both wages and self-employment income, the threshold amount for applying the additional Medicare tax on the self-employment income is reduced, but not below zero, by the amount of wages subject to additional Medicare tax. And then they're asking you to use Form 8959 for additional Medicare tax to figure this tax. So now you got to start using your own calculator, okay? And if we go further down on page 13, this publication is also telling you how to assist yourself with these accounting methods, okay? So they're telling you an accounting method is a set of rules used to determine when and how income and expenses are reported. Your accounting method includes not only the overall method of accounting you use, but also the accounting treatment you use for any material item. You choose an accounting method for your business when you file your first income tax return that includes a Schedule C for the business. After that, if you want to change your accounting method, you must generally get IRS approval. And so they give you the link to see change in accounting method, right? Okay, so kinds of methods. Generally, you can use any of the following accounting methods. You have a cash method, an accrual method, a special methods of accounting for certain items of income and expenses, and a combination method using elements of two or more of the above. Okay, so they even give you examples. Business and personal items. You can account for business and personal items under different accounting methods. For example, you can figure your business income under an accrual method, even if you use the cash method to figure personal items. Okay, so they're telling you exactly what you need to do if this is the lifestyle that you want to live. Okay, 2 or more businesses. If you have 2 or more separate and distinct businesses, you can use a different accounting method for each if the method clearly reflects the income of each business. They are separate and distinct only if you maintain complete and separate books and records for each business. Okay, now they're going to talk about the cash method because people love the cash method. Okay, most individuals and many sole proprietors with no inventory use the cash method because they find it easier to keep cash method records. However, if an inventory is necessary to account for your income, you must generally use an accrual method of accounting for sales and purchases unless you are a small business taxpayer. Okay, and they define that later on in this publication. All right, so then they give you examples of how you would utilize each of these methods. Okay, so now Ms. Aurorah is going to come on down here to page 20 because this is answering some other questions. Okay, because I get a lot of questions about bartering, and I have to tell people where exactly they find all of this in the IRS publication. Well, it's here in publication 334. So here we go. Business income. This chapter primarily explains business income and how to account for it on your tax return and what items are not considered income. And it gives guidelines for selected occupations. And you guys need to pay attention to this. If there is a connection between any income you receive and your business, the income is business income. A connection exists if it is clear that the payment of income would not have been made if you did not have the business. Okay, you can have business income even if you are not involved in the activity on a regular full-time basis. Income from work you do on the side in addition to your regular job can be business income. For example, you may be in the business of providing services for a ride-sharing business as a second job. You report most business income, such as income from selling your products or services, on Schedule C. But you report the income from the sale of business assets, such as land and office buildings, on other forms instead of Schedule C. For information on selling business assets, they're telling you to see Chapter 3, okay? So they get into non-employee compensation. Business income includes amounts you received in your business that were properly shown on Forms 1099 NEC. This includes amounts reported as non-employee compensation in box 1 of the form. You can find more information in the instructions on the back of the Form 1099 NEC you received. Okay? Payment card and third-party network transactions. If you are in a business, you may receive a Form 1099-K representing total dollar amount of total reportable payment transactions. This may not be the amount you should report as income, as it may not include all the receipts, and it may include items that are not included in your receipts, such as sales tax. Business income deduction. Income you report on Schedule C may be qualified business income and entitle you to a deduction on Form 1040 or 1040 SR. That's line 13. So they're asking you now to see Form 8995A or Form 8995 to figure your deduction if you have any. So now we're going to get on down to the kinds of income, okay? Here we go. You must report on your tax return all income you receive from your business unless it is excluded by law. In most cases, your business income will be in the form of cash, checks, and credit card charges. But business income can be in other forms, such as property or services. These and any other types of income are explained next. And then they give you the whole little thing here. Hey, if you are a U.S. citizen who has business income from sources outside the United States, which is foreign income, You must report that income on your tax return unless it is exempt from tax under U.S. law. If you live outside the United States, you may be able to exclude part or all of your foreign source business income. For details, they're telling you to see Publication 54, Tax Guide for U.S. Citizens and Resident Aliens Abroad, okay? So now here's the part that people like to ask Miss Aurorah about. Bartering for property or services, okay? Bartering is an exchange of property or services. You must include in your gross receipts at the time received the fair market value of property or services you receive in exchange for something else. If you exchange services with another person and you both have agreed ahead of time on the value of the services, that value will be accepted as the fair market value unless the value can be shown to be otherwise. And they give some examples. You are a self-employed lawyer. You perform legal services for a client, a small corporation. In payment for your services, you receive shares of stock in the corporation. You must include the fair market value of the shares and income. Example 2. You are an artist and create a work of art to compensate your landlord for the rent-free use of your apartment. You must include the fair rental value of the apartment in your gross receipts. Your landlord must include the fair market value of the work of art in their rental income. You are a self-employed accountant. Both you and a house painter are members of a Barter Club, an organization that each year gives its members a directory of members and the services each member provides. Members get in touch with other members directly and bargain for the value of the services to be performed. In return, for accounting services you provided for the house painter's business, the house painter painted your home. You must include in gross receipts the fair market value of the services you received from the house painter. The house painter must include the fair market value of your accounting services in your gross receipts. They go on to give several other examples, okay? They also give examples for real estate dealer, trailer park owner, hotels, boarding houses, and apartments. And this is falling under the real estate rents, okay? Prepaid rent, lease bonus, lease cancellation payments, payments to third parties, okay? Let's go on down. I want to get into the dividends here and how they discuss dividends in this publication, okay? Because we do get a lot of questions after, people watch the videos that I do on, stocks and things like that, right? So here it is. Generally, dividends are business income to dealers in securities. For most sole proprietors and statutory employees, however, dividends are non-business income. If you hold stock as a personal investment separately from your business activity, the dividends from the stock are non-business income. If you receive dividends from business insurance premiums you deducted in an earlier year, you must report all or part of the dividend as business income on your return. All right. And then they tell you to find out how much you have to report. They tell you to see the recovery of items previously deducted under other income. And they're going to give you that publication later. Now I want to come on down to taxes. Okay. Because this is where we are. You can deduct on Schedule C various federal, state, local, and foreign taxes directly attributable to your business. All right, income taxes. You can deduct on Schedule C a state tax on gross income as distinguished from net income directly attributable to your business. You can deduct other state and local income taxes on Schedule A, which is also Form 1040. If you itemize your deductions, do not deduct federal income tax. Employment taxes. You can deduct the Social Security, Medicare, and FUTA taxes you paid out of your own funds as an employer. Employment taxes are discussed briefly in Chapter 1. You can also deduct payments you made as an employer to a state unemployment compensation fund or to a state disability benefit fund. Deduct these payments as taxes, okay? Self-employment tax. You can deduct 1/2 of your self-employment tax on line 15 of Schedule 1, which is a 1040. Self-employment tax is discussed in Chapter 1 and Chapter 10. Personal property tax. You can deduct on Schedule C any tax imposed by a state or local government on personal property used in your business. Let me repeat that because this is another question that we get. You can deduct on Schedule C any tax imposed by a state or local government on personal property used in your business. Hello. All right. So that's for all the people who buy into the whole work from home, business credit, all this stuff like that there. Okay. And then they're going to go about giving you examples to that here. This is a great publication. Okay. Now let me come on down here to Section 10 because this is answering another question that we received via email. Church employee. Okay. If you work for a church or a qualified church-controlled organization other than as a minister, member of a religious order, or Christian Science practitioner that elected an exemption from Social Security and Medicare taxes, you are subject to self-employment tax if you receive $108.28. Now, I wonder where they came up with that nice number, $108.28. Yeah, or more in wages from the church or organization. And then they tell you for more information, you can see publication 517. Social Security and other information for members of the clergy and religious workers are found in publication 517. And I will have to do a video on that because, you know, we handle the religious trusts over here, okay? Because we're not getting into all of this. We're doing it the way that they tell us we can do it. And that is also in publication 517, okay? And please be sure to read your rights as a taxpayer, examinations, appeals, collections, and refunds. Okay. Get into that. If you have to pay self-employment tax, you must file Form 1040 or 1048 SR with Schedule self-employment attached, even if you do not otherwise have to file a federal income tax return. Now that's really where I wanted to take the secured entrepreneurs and all of the lovely people who stopped by to visit with us. When I talk to you all about that 1040 lifestyle, listen to what the publication is saying. If you have to pay, meaning you are considering yourself self-employed. So if you are considering yourself unemployed, they're telling you, if you have to pay self-employment tax, you must file Form 1040 or 1040 SR with Schedule SC attached, even if you do not otherwise have to file a federal income tax return. Why does anybody want to say that they are self-employed? Why does anybody want to say that they are a sole proprietor? I don't understand it. That's what Miss Aurorah wanted to get into in this video as it relates to this publication. So as you can see, there's 53 pages to publication 334. And anyone who has been filing a 1040, who has been claiming to be a sole proprietor, who has been claiming to be self-employed, okay, 1099 contract worker, all right, this is your publication. And you need to understand exactly how it is you are supposed to file and why it is you are filing. Okay. They give you all the nooks and crannies in this publication. As for the secured entrepreneurs, we separate from this road simply because we do not consider ourselves self-employed. Okay. We understand how to create the wealth cycle that allows for entities to do what they have been designed to do. Primarily, if you are operating out of a limited liability company, that is a pass-through tax entity. Unfortunately, when many of you go to have your 1040s done and you're saying, well, I have an LLC, they are passing the tax on through to you, and you are filing this 1040 abiding by all of these rules. Okay, so you are not taking advantage of all of the tax deferral strategies that the Internal Revenue Service allows via that particular entity. The other thing that I want all of you to keep in mind is that you must have a properly structured limited liability company, and the limited liability company must be organized in the correct state to take advantage of a lot of the opportunities that you have to be anonymous or private, and also deferring taxation in many ways. Okay, we've got a lot of people on the scene who are just not privy or up to date on some of these methods, so they are sharing information that they know, but it doesn't mean that it's the most helpful information for you to build wealth, okay, or to thrive as an entrepreneur, or to thrive as a business owner. Okay, that's it for this publication. Okay, now you have heard what the whole self-employment tax is all about. That is how the sole proprietor is being taxed. That is how the self-employed individual is being taxed. That is how the 1099 contract worker is being taxed. Okay, that is an entire lifestyle. The 1040 lifestyle is a real thing. Okay, if in fact you decide that that is not anything that you wish to do any longer, please go down in the link below and watch the training, Mastering Tax-Free Wealth. Okay, you can either click the link below, or you can go right to AurorahDayConsulting.com and watch the training, Mastering Tax-Free Wealth. Okay, so that's all Miss Aurorah wanted to share with you in this video. You all know you can find me, Miss Aurorah Dey, at AurorahDayConsulting.com. And until next time, ta-ta.